Hey guys, it's Nick, and I've been talking about GameStop and Wallstreetbets and the short squeeze and all of that, but it seems like they're setting their sights on another target, and that's silver. The thing that's interesting about this to me is that, for one, I'm long silver, so I would love them to do a short squeeze. But the other thing is that you got the Wall Street Bets guys that are setting their sights on silver, and that group is growing and growing every day. And then you got the hardcore die in the wool gold bugs, silver stackers, whatever you want to call it, that have been saying that gold and silver has been manipulated for years, and JP Morgan's keeping the price down and all this stuff. So if these two guys get together to try to do a short squeeze on silver, is it going to work? And what kind of price can we expect to see if this happens and it works out? So in this video, I'm going to talk about what could potentially go right with the short squeeze, what could potentially go wrong with the short squeeze, and how to play it without paying too much premium or taking too much risk. Now, before I start, I want to have a disclaimer. Assume everything I say here is talking my book, because I am long silver, so I would love the price to go up. So just keep that in mind when you consider anything I say here. The first most famous silver squeeze was the Hunt brothers in 1980, and they brought the price of silver up to $50. Now, what threw cold water on that squeeze is the same thing that could throw cold water on this squeeze, is that the exchanges changing the rules as they go. And so what they did was they changed the rules from physical delivery to cash delivery, and that kind of poured cold water on the whole thing, and that could happen this time as well. So don't just think that these exchanges and these big banks are just going to hand over tens of billions of dollars to the little guy without changing the rules first in their favor. The second short squeeze was around 2011, 2012, where people were pushing the same idea that buy an ounce of silver and you'll bankrupt JP Morgan because they're short a whole bunch of this silver. And it actually worked for a while, and silver went back up to $50 briefly. I remember going out to lunch and coming back and looking at my computer, and it had gone, SLV had gone to 50 and back down already. It was really quick. If you blinked, you might have missed it. But it was a good idea, but I don't know how short JP Morgan was, or these bullion banks and all this stuff. It's pretty complicated, and a lot of people just jumped on board because they believed it would work, and it did, kind of, to a small extent. Now in 2021, you got people like Wallstreetbets that seemingly can persuade a lot of people at the same time to put their money in one investment, like you see with GameStop or BlackBerry or AMC or whatever. If they set their sights on silver, which they're seen to be doing right now, this is before the silver open on Sunday night, and already all the physical silver sellers are not selling any silver. They're out of silver, and they're saying they're waiting for the price to open tonight to see where it opens, because apparently there's going to be a big spike up already. So what are the things that can make this silver squeeze work? Number one is inflation. The government is printing trillions of dollars, nothing new, but they're printing it at a faster rate, and eventually it's going to get reflected in the silver and gold price. That's what I believed even before the Wall Street Bets guys set their sights on a silver short squeeze. So if you have an investment in precious metals based on that reason alone, I would say that's a good enough reason right there. The second reason is kind of the story reason, and that's, Biden's here, he's going to do all these green initiatives, which include solar, which a lot of silver goes into the production of solar cells. So people are saying, oh, there's going to be a big demand. But they've been saying that for a long time, and it doesn't always materialize the way people say it does. And of course, the biggest wild card here, the nearest short-term catalyst, is Wall Street Bets. If they focus on silver after the GameStop short squeeze is over, who knows what can happen. But if silver goes up without gold going up, I would say that's a fake move, and it's going to go up and come down quickly. So if that happens, look to sell into the rally at some point. So here's the article on the silver short squeeze that people on Wallstreetbets are talking about, and you see the physical sellers, APMEX, JM Bullion, SD Bullion, they're all saying due to unprecedented silver demand, Bullion is unable to accept any additional orders until the market opens Sunday evening. So they're anticipating that the price is going to pop. And this is the SLV fund flow for the silver ETF. And it is the biggest fund flow since 2012 at the peak of the so-called JP Morgan short squeeze. And the short interest in SLV is increasing, so that also helps the short squeeze thesis. Now, this article on Reddit, the Happy Hawaiian, posted his thesis about the things that can make it go up. This is nothing new. I mean, silver dealers that have always been trying to say silver is going to go up, whether it's going up or not. They're like a broken clock. They might be right twice a day, but they're always bulls. So it's the same kind of thing. Solar panels is growing quickly because of political pressure and that kind of stuff. Now, just because somebody posts something and has a few interesting facts, don't take everything as gospel. And look at his disclaimer here. Do your own research, make your own decisions. Everything here is a guess and a hypothetical, and nothing is guaranteed. Not a financial advisor. I have ADHD and maybe other things too. Oh my God. Okay. So those are the kind of reasons why this short squeeze could work out, and it could potentially go above $50. I don't know if it will, but I'm definitely going to be selling into this, especially if the premiums on physical silver get out of whack from the SLV price or the futures price or the spot price. Now, even though I'm long silver and I would love to see it blast up to 1,000 or whatever crazy number they're talking about, I'm also a realist, and I've seen what's been going on in silver. As a kid, I was kind of interested in silver when it was like going up to $50 and gold was $800. I had a few silver coins and stuff I collected, like 1981 or 2 or something like that. So I've been watching silver for a long time and have owned it for a long time. And I see that silver is like the original Bitcoin, okay? And what I mean by that is silver is the thing that marketers and stuff dangle in front of usually unsophisticated investors as a get-rich-quick kind of thing. And so every few years when silver starts moving up, all of these marketers come out and they say the same kind of facts. Oh, silver's an industrial metal. Silver gets used up, unlike gold, which doesn't get used up. So silver is going to keep getting used up. There's going to be a shortage. There are no true silver miners. Silver is a byproduct of gold and copper mining. So, they don't get as much mining and stuff like that. They always have the same reasons. And sometimes silver goes up, sometimes it doesn't, but it's usually not because of their so-called facts. And they usually use it to sell overpriced silver to people. Commemorative, special edition, plated and graded, overpriced Morgan dollars for $200 or something ridiculous. And that's where they make their money, by selling overpriced silver, not by selling dirt, garbage, scrap silver or just 1 ounce bars or 100 ounce bars, because there's not a lot of premium in that for them. So that's where they make their money. That's why they spend so much on marketing, because they overcharge you for the silver, that people see the prices going up and they don't understand that they need to buy pure silver with small premiums. And so they get talked into buying all this numismatic silver and all this other stuff that is way overpriced. And by the time they actually go to sell it a few years later, when silver dips and they go to sell their $200 Morgan dollar that's MS65 or whatever, they find out that a coin dealer is only going to offer them $20 for it or something like that. So that's how people lose big on silver. And so that's why I say it's like Bitcoin. It gets hyped by a lot of marketers, so don't fall for that. But if there is going to be a squeeze, there's going to be ways you can buy it. So the reality is that barring the solar panels taking off or something like that, there is no real new demand for silver except the demand that's created in Wallstreetbets and in people's minds that if they go out and buy silver, they're going to squeeze it up. So in other words, there's going to be new demand from investors on Wallstreetbets. How long they hold it, who knows? But that doesn't mean that the people that bought it previously in the last spike up to $50 or 30 or 40 or whatever, when they see these prices going up, they're going to be dumping silver as well. The article says that boomers hold on to their silver forever and all this stuff. That's not necessarily true. So when the price goes high enough, people are going to sell. I'm going to sell, I'll tell you that. I'm not holding for $1,000 or whatever crazy number they put out there to entice people. I got realistic expectations for this thing, and if I see it getting out of whack, I'm selling some. The other thing that could throw cold water on this short squeeze is people like JP Morgan and the futures exchange and all of that, commodities exchange, the bullion banks, all this stuff that people say, oh, they have no silver in the bullion bank vaults, JP Morgan is short, blah, 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 all this stuff. Some of that may be true. None of it may be true. It doesn't matter because a lot of times they get to change the rules in the middle of the game. Okay, so silver short squeezes are kind of like Charlie Brown when Lucy holds the football and he goes to kick it and she pulls it away at the last second. They've been doing that with silver investors for a long time, and I don't expect it to be that much different. So don't believe all the pie in the sky stuff, and have some realistic price targets if you want to get out of this. Okay, so let's say after all those disclaimers, you still want to invest in silver because you believe in this short squeeze, or you believe, rightly so, that the government is printing so much money that it's going to create inflation. That's good enough reason enough without the Wallstreetbets short squeeze thing. So if you want to buy silver, what's the best and the cheapest way without paying too much or overpaying or taking too much undue risk?
So the safest way that most people say you should buy silver is to own it physically. If you don't hold it, you don't own it. That's the saying, okay? So you don't know what's going to happen with SLV or PSLV or options or futures on silver, but if you own it in your hand, you know you own it. However, look at APMEX. Due to unprecedented demand on silver products, we're unable to accept any additional orders on a large number of products until global markets open Sunday evening. Right now, silver is trading 27.15 from Friday. And for people that want to buy small amounts of silver, the most common one in America is the 1 ounce American Silver Eagle. And you see they're all not for sale. They say, alert me. They have no prices. You cannot buy it. Now, if you're serious about investing in a large amount of silver, I recommend you do the 100-ounce bars and to buy the most generic one possible. So you can buy this 100-ounce secondary market bar, meaning that any bars that get sold to them or whatever, odd name bars, it could be APMEX, it could be any kind of other name, but they're 100 ounces of pure silver, and these are the cheapest ones you can buy. These are usually like 2 or 3% over the spot price a lot of times. APMEX might be a little bit more than that, but they're still kind of generic. When you get down to the Englehards and all this stuff, Johnson Matthey, there's no real reason to buy these unless you're kind of a collector. It's still 100 ounces, but it's kind of like a brand name, and you pay for that. You pay more for that, and I don't normally do that. I want my silver as cheap as possible. It's like buying a bag of rice. I don't care what the name on the bag says. I want 10 pounds of white rice. I don't care what the brand is. I want the cheapest one, and that's this secondary market. And so this is the ridiculous stuff I'm talking about that people get talked into buying when they see that silver's going up or gold's going up. So they go and get talked into buying nonsense like this. Star Wars 1 ounce gold coin, $4,200. Okay, you buy this, you're down more than 25% the day you buy it, because the day you sell it, if you try to sell it tomorrow, you're going to get $1,857 or thereabouts for it. Same with the silver nonsense. Okay, 1 ounce silver Star Wars, Mandalorian, whatever nonsense, $80. Okay, the second you buy this, if you try to sell it, you're going to get $27 from a coin dealer. Okay, so don't fall into the trap of, I like silver and I like Star Wars, so I'm going to go buy these stupid things for $80. It's total nonsense. And don't mix investing with, the movies you like. So even though physical silver is the best way to own it, if the premiums get too crazy, and American Eagle was trading for like $33 before they ran out or whatever, that's already a pretty significant premium of about, what's that, 20% or so. So if the premiums get too crazy, I don't recommend buying physical gold or silver, because like I said, once you buy it, if you try to sell it, you might just get the spot price. And so if it's a 50% premium like we saw during the original shutdown in March and April, things were going for a lot over the spot price. And if you bought them, you're down money now still. So if you plan on just getting into silver for a short-term investment for a few months, hoping that the Wallstreetbets guys squeeze this thing up and then you're going to get out, the best way to do it is to buy the SLV ETF, that's the iShares Silver Trust ETF, or the Sprots PSLV ETF as well. But the SLV has options that trade on it where the Sprots doesn't, I believe. So a lot of people are talking about, go buy the $35 option going out to April or something like that. That's a much more riskier way to do that, because if this thing doesn't happen in time, you lose all your money on the option. So if you want to be more conservative, then go buy the SLV or the PSLV ETF and hold on to it. A lot of people say, that they don't own the silver in the vault and all this stuff. There may be some truth to that, there may not be, but if you're just holding this thing for a few months and are looking to dump it on a short squeeze or whatever, that's pretty much not going to matter in the end, really. One thing to think about is, does silver and gold do well if the stock market crashes? Because a lot of people think we're in a stock market bubble, right? So let's take a look. During the great financial crisis here, silver fell a lot. Gold, this blue line, also fell along with the S&P 500, this purple line. But not long after, you see we had the silver short squeeze and gold going up. So they did recover and recovered much well. However, look at it now. Silver is up 90% since what, like 06, 07 prices. But gold and the S&P 500 are up almost, double that. So guys, that's a look at what could possibly happen, what could go right, what could go wrong, and how to buy silver if you're interested. I'm not recommending you go out and buy it just because I said I have it. This is not a recommendation. I'm not a financial advisor, all that stuff. And really, if this is your first time even thinking about buying silver or the SLV just because you saw it on Wallstreetbets or something, or you saw GameStop and you think silver is going to do that exactly, do not put all your money in this. Don't even put an amount of money that you are afraid to lose or will hurt you financially, because there's no telling what is going to happen with this. And so looking at the previous time silver ran up to $50, when it was $50, people weren't saying $50 is the target. No, they moved up their target to 100, 200, 500, 1,000 based on the gold-silver ratio, based on all these things. So during euphoria, people get so euphoric that they keep raising the target prices. Don't do that. Be realistic. If this thing starts moving a lot, take some chips off the table. If I start seeing the physical premiums get too high, I'm going to start selling some physical silver. So guys, don't go crazy on this. Don't put your life savings in some out-of-the-money call options on silver or something like that. Don't go paying crazy premiums for the physical or buying commemorative Star Wars silver for $80 or something ridiculous. If you're going to buy it,
make sure you don't pay too much over the spot price. And if that's not possible, then go buy the SLV or PSLV as a kind of approximation for the physical. If you found value in this video, give me a thumbs up, and I'll see you on the next one. Thanks for watching, guys.